Well, I can tell you that right now the fear factor is incredibly high. Throughout the year, AIG does various surveys, and we found that about 79% of retirees and pre-retirees are saying they are concerned or very concerned about a market decline. And quite frankly, they should be. Right. Because for investors who are near retirement or are in retirement, that whole sequence of returns risk is really, really important to them. Because if they retire right at the wrong time when the market goes down and they have to take withdrawals, that can be, a game changer for the rest of their retirement.
You've done studies on this. I mean, obviously, if you're younger, you don't have to worry about it for decades. Just let it go. But if you're somebody who's going to have to live off this, what does the difference make if you retire in an up market or a down market?
Oh, it can be huge. We have a situation where we looked over a 15-year period, and you take two exactly the same investors, they invest the same amount of money, they take 5% withdrawals, and the only difference between the two of them is that one retires 2 years earlier than the other, and they happen to do it during a significant market downturn, and the other one on an upturn in the market. Do you know that 15 years later, if you look at what their results are to have for the rest of their retirement, that person who retired and took withdrawals during that early period can have 2/3 less for the rest of their retirement. So those numbers are significant, and we tell people all the time. It's why it's important that you have other sources of protected lifetime income, things that you can rely on that are stable, that are going to give you a monthly check for life so that you can cover your expenses, and then you don't have to do the withdrawals.
A pension or an annuity if you don't have it.
Exactly, because otherwise you're going to have to withdraw right at the wrong time.
I wonder if one of the things that maybe heightens anxiety right now is people planning for the fact that they're going to live a very long time in retirement. And if you look at, I was just looking at the, these sort of target term asset allocation funds that say, okay, I'm going to retire in a given year. Sure. 2020 right now, it's like 55% in equities. Yeah. Right? It's 2 years from now, and these models are keeping you more than half in equities. Is that something that makes sense to you, or do you just have to kind of plan around the possibility that in the next 2 years, that 55% is going to be very risky?
Yeah, I think that when you look at asset allocation at any given point in time, we encourage people to really be meeting with their financial planners right now, because I think looking at those allocations is really important. But actually, the real source of anxiety for people, okay, when we study it at AIG in the marketplace, 61% of people say that their greatest fear is actually outliving their retirement savings.
But that's a legitimate concern.
And that is a huge concern. In this country, we're literally today facing 3 major tidal waves. And each one of them on their own are kind of daunting. You put them together, we've got the perfect storm. You start with the fact that we have the aging of the U.S. population. In a very short amount of time, 1 out of every 4 adults is going to be retirement age in this country. It's the fastest growing segment of the market. If you add to that what we've seen in the decline in pension plans in this country and defined benefit plans, actually between the period of 1985 and last year, we lost about 79% of the private pension plans in the United States. Wow. So we've done a pretty good job, I think, as a nation, trying to supplement that with savings plans, with 401ks, but we missed the elephant in the room. And the elephant in the room is replacing that income piece.